for $1,200 this month in stocks. In this video today, I am going to be going over my stock portfolio updates, stocks I have added in the month of May to my Robinhood portfolio. You guys, saddle the hell up because I spent too much money this month. That's all I gotta say. So without further ado, let's just get into this video. And if you're new here, what is going on? My name is Nikki, and meet the absolute world to me. If you would consider subscribing by hitting the NB in the bottom corner or the red subscribe button, join the crew, join the journey. On this channel, I post 2 times a week, specifically on Tuesdays and Fridays at 6:30 p.m. ranging from faith, finance, sexuality, business, my life, my journey through life. I believe everyone's life is a journey, and that journey is worth sharing. And I say journey a lot. I am just documenting my steps along the way, so if you're into that, or if you just love hanging out with me half as much as I love hanging out with all y'all, please consider subscribing. Okay, so without further ado, we gonna get into all this mess. I honestly feel quite ashamed, but what can you do? So I don't want this to be super lengthy, because a lot of my videos last week were very long, and I'm gonna try to make it, you know, short, sweet, and to the point for y'all. Look at him back there. Usually I take him down because I don't want people to know that my grown ass has a penguin stuffed animal, but you know what? It is what it is. Alright, you guys, so as usual, I have my, you know, my things here. My things. And by things, I mean stocks. I have a few stock videos. I have a playlist about stock investing, dividend investing. If you know me, if you've watched me before, you already know I invested in the Robinhood app. So if you want to copy a free stock, there's a link down below. But you all probably have that set up. So you guys, I have added, okay. I don't even know where, I need to calm down. There's a lot going on here. My last stock video, I talked about what I may buy in May, and I will link that up here for y'all. Go watch that first, then come back. You guys didn't click it, did you? That's fine. If you watch that video, you know that I was talking about Johnson & Johnson, Waste Management, Adobe, DocuSign, and what the hell was the other one? Oh yeah, Boeing was on that too. I did purchase two. I purchased 2. I was heavily watching Adobe and DocuSign. You guys, when I made that video, I think DocuSign was like $100, $105. Adobe, I think, was $350. Adobe is now in the 360s, mid 360s. DocuSign is now like 126. Probably should have bought it then. Not something I bought now. I don't know. I just feel like I missed a deal. When I missed a deal, I'm a little bitter about it for like a minute. By a minute, I mean a few weeks or a month. I'll check back to it. I still have it on my watch list. So let's just get into the list. This one is Waste Management. I just love them. If you want to watch my other video, I went into kind of in depth as to why I was watching them. So I'm not going to go super in depth about it right now. But just know I added them. I really love Waste Management for a lot of reasons. But as you can see here, I have 3 shares, but I did buy them at different times, so let's find that. So I went ahead and bought 2 shares at a price of $97.99 for a total of $195.98. That was my first bit there. And then I went ahead and bought again one for $95.76. So both of those together came out to be $291.74 in Waste Management this month. Love them. I really think they're pretty recession proof. I like the price they're at. Their dividend is paying a 2.26, which for me, anywhere between 2 and 4 is kind of like, I feel comfortable there. Their financials, all that stuff, all that details in the other video, but I went ahead, I did add them, 3 shares, and I am very happy with my addition of Waste Management. Alright everybody, so the next one is another one from that list. It is Boeing. So Boeing, I was kind of like hot and cold off Boeing. I was nervous about it, but then I went back and forth in my brain like, no, the American government loves Boeing. We kind of need Boeing. Boeing is a powerhouse for America and the US of A. So I was like, you know what, I'm comfortable. I went ahead, I did end up buying 1 share only, so I didn't really like lurch on it. But I did buy 1 share for an average cost of $126, so as you can see, I am down on it. But I'm very happy to add Boeing. I think long term Boeing is going to be absolutely fine. I'm really not concerned, and I do plan on adding more to bring that average cost down a bit. I mean, I'm still kind of kicking myself like here, if we look in the 3 months, see this right here? When it was like $90, I should have. I remember watching it drop down there and I was like, should I do it? And then there was like bankruptcy talks and all this stuff and government bailouts, and I was like, ooh, That's risky. And then I was like, no, Nikki, it's Boeing. So I really wasn't upset about it, but you know what? I'm just glad I've added to my portfolio. So there is that. Biohaven Pharmaceutical. I had 4 stocks, so I went ahead. I bought one more at a cost of $45.86. So that brought my average to $51.64. I now currently have 5 shares. It's not a dividend paying stock. It's really just, to be honest, I think I mentioned this before, it was really just something Kramer talked about when I first started investing. So I went ahead and I grabbed it, and I was pretty high on my average. So when it started to drop, I was keeping an eye on it, but I never pulled the trigger. So I just thought, you know what, I'm gonna throw another share in there. So that's really all I did with that. So that's Biohaven Pharmaceutical. It is what it is. All right, y'all, so moving right along, the next one is SPYD. It's one of my ETFs. I've kind of talked about the holdings I have for ETFs, but basically an ETF, it's a bunch of companies within one stock, and it diversifies you across those companies. So this one, for example, follows the S&P 500. It's a high dividend ETF. As you can see here, their dividend is 7.15%, which is dope. ETFs are usually less risky, so that 7 number doesn't really scare me. If I saw that in an individual common stock, I might shy away a little bit, but I'm cool with this one being what it is. And as you can see, if I scroll down here, I did purchase 4 shares at $26.63 for a total of $106.52. So that is something that I added. I love, like I've talked about before, but I'll just touch it right now. SPYD, SPYG, SPYV are like my favorite. Just so you know, if you want to check those out, go ahead, check them out. Highly recommend ETFs, especially when you're starting out. Not a bad place to put your money. All right, well. This stuff is so good. Like, what? Like, you guys drink Crystal Light? This is like peach mango Crystal Light with caffeine. Oh, it's so good. All right, y'all. We have 1, 2, 3, 4, 5, 6 more stocks to talk about. So here we go. All right, so this next company doesn't need much of an introduction or explanation as to why I've added to my position, but it is Coca-Cola. You guys already know I love Coca-Cola. I love Diet Coke. I love regular Coke. I love the red. I love the fact they've been around forever. I love the fact they still pay their dividends. I love almost everything about Coke that I could think of. As you can see, it does pay a dividend yield of 3.73 right now. If we drop down here, we can see my order. I ordered 3 shares at $45.70 a share for a total of $137.10. You know, it's kind of weird because when here's the thing, they make it too easy to buy these stocks on these apps, especially with instant deposit. It's like, wait, let me just transfer $800 over and it's like instant. It almost doesn't feel like real money, but I mean, better to buy shares of companies that'll make you money versus, I don't know, like new clothes or something, which I honestly kind of need, but that's okay. There's not much I have to say about Coca-Cola. I am a consumer. I always talk about investing in companies that you yourself are a consumer of and you believe in. Coke is solid. Coke has been around forever. Coke will continue to be around, and I'm not worried about it. So went ahead, added more of that. All right, so the next one is a little bit of a risky one. It was one that I had put some money and some shares into early on when I first started investing back in December 2019. My dad and I kind of just found it and we're like, hey, this would be cool if you put, you know, $100 into it and see what happens kind of thing. That is AGEX. So as you can see here, I went ahead, let me go down here. I went ahead, I bought 40 shares at an average cost of basically 78 cents a share for a total of $31.14. And then I did some more. So I added 20 more shares on top of that at an average cost of 68 cents for a total of $13.64. So that brought my overall total to $44.78. And if we go up here, we can see that I now have a total of 100 shares of this company. Brought my average cost down to basically $1. It was like $1.76 or something like that, I don't know. And I always talk about, you know, doing your due diligence and researching and educating yourself on companies before you throw money in there. I have to be honest with you, I did not do that on this. I looked at it a little bit early on, haven't really visited it too much after that. Like I said, it's pretty much for me just, you know, I'll throw money in there, and if it works, it works. If it doesn't and I lose 100, 150 bucks, then you know what, whatever, shame on me. But I'm so long term that it's kind of okay. So that's kind of just where I'm at with AGEX. I know I've got a lot of comments like, are you stupid? Like, that's a pass. And then I've got some comments that are like, wow, that's an awesome company. I really like it too. Just figure out what works for you. Don't follow my lead at all, ever. And that's really all I have to say about AGEX. Alright, you guys, so the next addition, well, not even an addition, it's just I added to my position. I already have this one. That is going to be American Express, and I know financials right now are pretty iffy. They're very kind of risky. There's not really a light at the end of the tunnel for them, like anytime soon. But my thought process on American Express is, you know, I feel as though it's a big enough financial company to make it out of this hot ass mess that we have going on here. I am a strong believer, especially because American Express is tied to a lot of business, and I know businesses are down, but businesses are adapting, and they're still gonna need finances to run themselves. So I believe in American Express. I have American Express. I know when businesses start traveling via airlines again, I know a lot of credit cards from American Express have really good airline perks, and I don't believe that this situation we're in is going to totally terminate that for a long term. So long term, I think it's actually gonna be fine. I see this more as a great buying opportunity to get into, or either lower maybe your average cost that you have or whatever. I mean, whatever your little strategy is, but for me personally, I think it's good. So I'm gonna go ahead and show you here. If I scroll down here, you can see my additions. So I went ahead and I bought 2 more shares at an average cost of $86.40 for a total of $172.80. So that went ahead and lowered my average cost to $91. I have 5 total shares. I'm obviously down for the reasons I've already mentioned. I like American Express. I'll probably continue to add into American Express, just not all at once. Kind of divvy it out month to month and just kind of see what happens and adjust if I have to as we go. Alright guys, so the next one is Raytheon Technologies. I don't know. I still don't know how it's pronounced exactly, but it is RTX for the ticker. I mentioned before in a video that somebody had commented down below for me to look into it. I looked into it a little bit. I opened a position. I kind of liked it. It's basically defense and aerospace, which we need as America, so I feel confident in it. I think the balance sheet, the cash flow, the income, all the statements and financials, they looked really good. So I was pretty excited actually to get this mentioned at me, so shout out to you. I do like it, and I did add. So if I go down here, we can see I added 1 share at $57.70 for a total of $57.70, but then I went ahead and added another one at $51.89. So when I add that up, my total came out to be $109.40 that I added into RTX this month. I pretty much see this as a great discounted stock right now. If you look here at the 5-year mark, I mean, look at that, it's 55% off. That's a great discount. I think it's gonna be fine. Look, I mean, look at where it was right before it dropped off. 150. It's 3 times what it is right now, pretty much. So I'm excited about it. I'm gonna keep an eye on it. Like I said, the whole defense, aerospace, and being America and having to have that defensive system and everything like that, I think it's a very good look. I think it's not bad. So I'm not gonna say much about that, but shout out to the person that made me look at it. I do actually really like it, and I encourage y'all to kind of check it out for yourself. They do pay a dividend of 3.51. I thought I heard they cut it, but to be honest, I don't think they did. If you know that they cut it, tell me down in the comments below. I thought I heard that. I never followed up with it. It kind of slipped my brain until right now, to be honest with you. Yeah, I mean, I'm not really mad about that one. All right, you guys, moving on. So the next one I already had in my portfolio. I'm just adding to my position. I really like this company. I am a consumer. Before this whole situation, I went like once a week probably. I get my medication from there for my hypothyroid. I shopped there. I like what they do. I believe in them, and that is CVS. I went ahead and I bought 2 shares at an average cost of $62.25 for a total of $124.50, and that actually raised my average cost. I think I had it around $58 before, but it's at $60.90 now for 3 shares. Not mad. They do pay a 3.27% dividend, which I love. I recently actually just got paid their dividend. You guys, the month of May is my biggest dividend paycheck thus far. So if you're not subscribed, make sure you hit the subscribe button, because that video will be coming out at the end of the month. And I'm also going to be posting an extra video this week about the stocks and stock market and how to invest your first $1,000. So go ahead and subscribe for that too, because if you got $1,000, you need to know where to put it. And you guys, CVS, I don't want to go into too much detail. I'm a consumer. I believe in it. Statements look good. They pay me a dividend. They just paid me one this month, so I had to add to it. All right, guys, so the next one is one that I have been keeping an eye on for a very long time, but I just couldn't get myself to pay. what it was at. I just felt like it was high, and I kept watching and watching, and it came down a little bit, but even with this whole thing, it didn't drop that much. But it was down 3% today, the day of filming this, so that's why I bought it today. It's a new edition, and that is McDonald's. So I went ahead, I added McDonald's. I don't eat McDonald's all the time, but you know, they have the best Coca-Cola, which I own, and they have the best fries and chicken McNuggets, and don't come at me, okay? Because they do. So I went ahead, went in there. I don't see anything happening with McDonald's. Like, McDonald's was around a long time ago. McDonald's about to be around for a very long time. They've totally remodeled almost every single one of their freaking stores, I think. It looks like a futuristic hotel lobby that you use like computers to order your food. I don't know, it's kind of crazy, but I kind of love it. And for me, it just shows me that they're trying to kind of like move forward with everything, and they're not getting stuck. And it's McDonald's. Everybody knows McDonald's. It's just solid, okay? It's just a blue chip company. So I went ahead and added them at a cost of $172.75. I did just buy one share. I didn't, you know, I didn't go crazy. They do pay a dividend of 2.89%, so that's exciting. I will definitely be adding to McDonald's. Great financials. I am a consumer sometimes. I know a lot of people absolutely love McDonald's, so I'm really, really excited that I got to add this because I've had my eye on it for like so dang long. All right, y'all, so those are my 10 either additions or position additions into my stock portfolio. To recap, okay, I'm gonna have to read it because I don't have it memorized. Biohaven, Waste Management, SPYD, the ETF, Boeing, Coca-Cola, AGEX, the biopharmaceutical, American Express, Raytheon, RTX Technologies, McDonald's, CVS. You guys, I spent, oh, my voice cracked, a total $1,331.45 this month. That is so disgusting. Oh, you guys, I almost forgot. Oh, I almost forgot to tell y'all, and you might have just seen it right there, because this is a very cool thing that I did. Actually, it's not really that cool, and I'm kind of sad that I did it, but I got some profit, so I want to let you know about it, you guys. Okay, so if you know that I have shares of Peloton, okay, like the bike, the fitness, like online cloud fitness company, Peloton, and I had 11 shares of Peloton at an average cost of like $27.99. Look what I did today. Look at this. Can you see that? I sold 5 shares, okay? I sold them for, I think it was like $49 something, $49.35. So I took some profit because your girl was up about 78.5%. And I really like was tossing and turning with this because I was like, I don't want to sell. I want to just keep investing and hold long term, but I don't want to buy more in the 40 range and then have it just bring up my average cost. But I also don't want to wait too long and have it drop all the way down and then I didn't take any profits. I went ahead, I did end up selling 5 shares. I took about a $246 profit, so I used that money with all the purchases that I had done this month. That was kind of exciting. I don't normally do that, kind of like buy it and then sell it when it goes up. But when it goes up almost 80%, I think you have to take some profits. So what do you guys think? Do you guys like Peloton? I'm a huge fan. I love it. If you own Peloton, please let me know down below. If you hate it, you can also let me know down below, but I don't know. I have never spent that much money in 1 month, pretty much on anything in my life besides rent. But like I said, they just make it too easy, and honestly, I didn't even know that I was shooting out cash like that. I really didn't. If you've made it this far in the video, please comment down below with new additions that you added in the month of May. I always love seeing what you guys add so I can kind of put it on my little list to kind of look into and research and whatnot. You guys, like I said before, I will be posting an extra stock video this week, so make sure you are subscribed so you don't miss that. If you made it this far, please give this video a thumbs up. It would mean the absolute world to me. The YouTube algorithm loves it. It would help push out my content. And you guys, if you made it this far, you are the real MVP. Come here, you know I love you. Like I say at the end of every single one of my videos, enjoy the journey, whatever your journey is, and always remember to do what sets your heart on fire. And me and Scooter will see you in the next one. Bye, guys.